What's in for FCT next quarter? As of recording this video, it's 22nd June, just 8 more days till we reach the end of June, and that would seal the third quarter results for FCT. So while I was waiting, I went to tabulate a table of the various business metrics of my REITs, and ta-da! I was kind of surprised when I saw the net profit margin of FCT rose to 59%. Before I continue, you need to know that my net profit margin includes the distributions from joint ventures because it flows down to my DPU. You can learn more about the distribution from joint ventures in the video description below. Going back, so I wanted to convince myself my figures are right? So using the same trusty equation, revenue minus expense equals the profit. We will analyze these factors. These factors are built over time after observing how the REIT operates, clarifying with the management. So if you want quick, you can take a screenshot. Regarding the top 10 tenants exposure concept, I'll pass the video link at the end of the video. But let's jump and start with the first one, which is increase NLA the inorganic way. So what I mean by inorganic way definitely is the acquisition of Northpoint City Southwing at 1.133 billion on the 26th May 2025. So FCT have completed the acquisition, and to put Southwing into our FCT portfolio, we raised 420 million through equity. But there's also another important thing, which is the remaining bank loans of 785 million, which, pause, I needed to do an update because if you have watched the previous video, there was a missing info that I was looking at when it comes to our Southwing acquisition. The missing info is the interest rates of those bank loans. After clarifying with the REIT managers during the EGM, I understood that the interest rates are high 3, just below 4%. Because why is it going to be important? I wanted to compare the cost of incurring these borrowings with the rental income. Let's move to the second point, which is increased occupancy. So, the important question I asked myself, can my REIT increase its occupancy so that all spaces are rented out? Based on this chart you will see right now, stable committed occupancy. I believe our FCT managers have maintained it fantastically. So thumbs up to the FCT retail management team. But I'm also kind of curious, how does the day-to-day operations feel like? I think it will be wonderful if Richard allows me to experience. That said, I also took the opportunity to compare FCT with CICT, right? Because we want to make sure that, are there any differences? And if yes, why so? Great occupancy rate would not be possible without this third point. It's definitely the shopper traffic and the tenant sales, which you see right here. That shopper traffic is up 1%, tenant sales is up 3.3%. And to be clear, our managers designed the retail concept mix to attract shoppers. However, tenants must close the sale. So once tenants' sales increase, it allows our managers to seek positive rent reversions, where FCT have hit 9% for first half 2025. To obtain these results, the interest rates of debt incurred to own these assets is 3.8% because REITs mainly borrowed to fund their building acquisition. Since it has dropped, the cost of running the business should drop too. Let's take one step back to summarize everything that you have heard into one picture, because our objective was to understand what went well and what must improve in FCT. First, NLA improved because of the acquisition of Southwing. Second, shopper traffic improved by 1%. Tenant sales increased by 3.3%, while rent reversions have improved by 9%. Interest rates of debt is now at 3.8 from 4 previously. For occupancy is neutral. They have done their best at 99.5%. What is your take on FCT? As of recording this video, I must declare that I am a shareholder. Thus, please exercise independent thinking. And earlier on, I mentioned the top 10 exposure concept. So watch this video so that you learn more about your retail REIT tenants exposure. If not, your business might be at risk.